Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. We're going to get started here in about a minute and a half. We're going to let everyone log in. Today, we're going to do a deep product dive into our debt service coverage ratio program, and I'll introduce our two subject matter experts here in about a minute. Hope everyone's having a good month, getting ready for the holidays, or we were just talking about our plans, so but give it about another minute. People are still logging in. We had a really good turnout of people that registered. So this is going to be recorded. It is not a recording, but it is going to be recorded, and we will get this out to you before end of day tomorrow. We want to keep this really interactive, so get your questions in the question queue here, and we'll get our subject matter experts to answer all your questions. If we don't get to all your questions, we will have your account executive reach out to you probably no later than tomorrow morning to answer your question and hopefully have a loan scenario. Give it about another 30 seconds, people logging in. All right, let's get started. Again, my name is Jeanmonod, Regional Vice President of Sales here at Angel Oak Mortgage Solutions. This is going to be a deep product dive into our debt service coverage ratio program. Our subject matter experts, I'm fortunate enough to work with every day. So I'd like to introduce Stacy. Stacy, give us a little of your background.
Hi guys, thanks so much for joining us. I am Stacy Flanigan. I'm in the Tampa Bay area, and I have been with Angel Oak since the end of 2013, and excited to be here and kind of refresh your guys' memories on what we do. And any of you that are newer to Angel Oak, let you know about these programs that maybe you don't know exist, so we can help you guys boost some more income.
Great, thanks, Stacy. And Carlos, please introduce yourself. Give us a little background.
Hey, everybody. Carlos here at the Angel Oak here, and at the Miami office, Miami territory. I've been in Angel Oak since 2014, and I know a lot of you guys and some of you that are emailed me about the webinar. Thank you for joining us. And just like Stacy said, I want to go ahead and just spread the knowledge and the gospel of all these good programs for you guys to close even more loans and coming up this year. So
yeah, thanks, Carlos. Thanks, Stacy. Yeah, this is again a deep product dive into our debt service coverage ratio. We're going to cover highlights of the program. We're going to talk about what we want, and more specifically what we don't want on the 1003. We're going to talk to what kind of trade lines we're looking for. We're going to go over some quick tools, or quick quote tools, and then we're going to at last really where to find these borrowers and how to market to them. So let's get started here. But before we get started, I'm going to go back to the home page. But before we get started, we're going to launch a poll here. And that poll is, who has originated a debt service coverage ratio loan in the last 12 months? So take a couple of seconds here. This program is probably about 30 to 35% of our business here at Angel Oak. It's been a real popular program. About 36% of the homes in the U.S. are rental properties. So, this is also for first time and seasoned investors. So let's look at our poll results. Can either of you guys see what the poll results are?
wow. 84% no.
Okay, I've got them here. Thanks, guys. Wow, 84% of you on this call today have not originated a debt service coverage ratio in the last 12 months. So this is a huge opportunity. You've got two of the best in the business on here. So let's get our questions going. Stacy, cover the highlights of the program here.
Sure. Actually, that poll is really exciting, knowing that 84% of you guys have not done a debt service coverage ratio loan. So this is super exciting. So I'll kind of give you guys what is a debt service coverage ratio loan. Some people may know it as the investor cash flow, DSCR, which stands for debt service coverage ratio. So what this loan is, it's for investment properties only. So it's an investment property where we're not qualifying the borrower on their income. There is no income. There's no employment on the 1003. That's going to be left blank. There's no DTI. So what how do we calculate this is going to be off the market rent on the property. So if the market rent on the appraisal covers our mortgage payment, then that's what's called the cash flow or the ratio. It's got to cover our mortgage payment, which we'll get into more detail about how much it needs to cover. But that's basically what the loan is. It's the market rent covering your payment. It's not the borrower's income. So a couple of the highlights of this program, and again, we'll go into more depth on that. I just wanted to kind of give you a broad reasoning of what this program is and kind of how it works. So with this program, we do go up to an 80% loan to value. So think about it. The borrower has to put 20% down on an investment property where they don't have to show any income, no tax returns, nothing. So that's pretty exciting. We go down as low as a 80 mid score on that. And we go up to $1.5 million loan amounts. So the minimum loan is $75,000, but we go up to $1.5 million. So again, it's based solely on the cash flow of the property. I'm sorry.
Nope, you're good. Keep going.
Okay. So what does the cash flow have to be? So the debt service coverage has to be 115%. What does that mean? So if your mortgage payment, and this is PITIA, so principal, interest, taxes, insurance, and HOA if there is one. So let's say that comes out to $1,000 a month. Your PITIA is $1,000 a month. We want that market rent on the appraisal, which is called your 1007, to come in at 115% of that. So you take $1,000 and times it by 115%. That means the market rent on the appraisal only has to come in at $1,150 or higher. So if it comes in at $1,150 or higher, then you're good to go. You have a loan. You're done. Now, if it doesn't come in, and it's close, you got things that you can do. Maybe they can get a lower insurance quote. Maybe they can buy the rate down 0.5%. So if it's close, there's going to be things that you'll work with your AE on to see how to get the cash flow to work. If it's not so close, we do allow the cash flow to go down to 0.8%. So it can actually be 20% below your PITI payment if your LTV is at 70% or less. So again, this is things that the AE will go over with you to try and make it work. We do require the borrower to own primary residence. We want to make sure that we are sure that this loan is going to be an investment property. And one way we do our due diligence on this, they own a primary property.
Stacy, Stacy, 1 minute. Your audio is getting almost a little feedback there. So
is that me though?
I don't know if it's you or.
How's that? Is that better?
Better. Thank you.
All right, let's try that again. So you do have to own a primary residence. And again, we're just doing our due diligence to make sure that this property is going to truly be an investment property. Dodd-Frank says we can't do a no-doc loan on a primary. So one way we make sure it's not going to be a primary is we make sure that they already own a primary residence. So if they're living at home with mom and dad saying it's going to be an investment property, that's going to be a hard sell. Now, if they do rent, but they have multiple rental properties, they have 10 rental properties, they're really building their portfolio of rental properties, that's one that's going to make sense that they don't own a primary. So again, you're going to go over that stuff with your account rep to make sure it makes sense. The other thing is on these, you can close, because it's a rental property, you can close in an LLC. The LLC does not have to be seasoned any length of time. So they can create an LLC today and close in it tomorrow. Anyone that's on the LLC does have to be on the loan, and we go up to a max of 2 people on that.
Perfect.
You can own unlimited amounts of properties, or they can be a first-time investor. Maybe they just want to start getting into purchasing rental properties. We know it's a great market out there right now for rentals. A lot of people are getting rentals to make additional income. So right now is a great time. And again, 84% of you not having done these loans before, it's a great opportunity, especially if you go out and do realtor presentations. Bring this program up, and I guarantee you that at least one realtor will come up to you and say they want to do this loan for themselves. Happens every time. Get in touch with your AE. We're more than welcome to come out and do these presentations with you as well.
Stay into the marketing part.
Oh, sorry.
No, I love it though. I love it because it is what we're here to do. We're really here to show everyone on this call how to continue to grow your business, and especially where we are from refis, definitely. But we're definitely going to cover that. In fact, you're going to cover that when we get to our marketing portal. So.
Okay, I get so excited about this program. I just can keep going on forever. It's actually my favorite program that we have, I would say. So these can be done as a purchase, cash out, rate and term refi. If it's a refinance, guys, and they have a year lease, we can use their current rent instead of the market rent on the appraisal. So if that is the case and you have a year lease, show me 3 months that they've been getting that lease amount, we'll use that in lieu of the market rent on the appraisal. We also have the 30-year interest only available. Right now, we all know interest rates are a little bit on the high side. We understand that. Good thing is they will come down eventually, and everybody will eventually refinance out of these rates. So to kind of help out with that, alleviate some of that stress, we do have the 30-year the 30-year interest only available, where it's going to be an interest only payment for the first 10 years. And the great thing about our interest only, it's going to recast every month. So they can actually put a little bit more down, not more than 20% per year, or else they'll run into a prepayment penalty issue. But if they put down a little bit more towards their principal each month, then we will recast that so that the interest only payment the following month is based on the new balance. Just kind of an FYI, which I think is a great aspect. I don't know many lenders that do that. So that's kind of the overview before I go into everybody else's parts and scenarios. I apologize for getting excited. So, but that's a basic overview of the DSCR program.
Well, Stacy, you answered David's question about a first-time investor, and you answered a couple other questions. So that's awesome. So, and you started talking a little bit about the 1003, and Carlos is going to make me laugh here. So, Carlos, cover the 1003, Carlos. I know Stacy touched on it a little bit, but tell us the most important parts of what the 1003 really needs to look like.
Yeah, I'll kind of work kind of backwards. I'll say that it's a complete 1003, a standard 1003, of course, but just eliminate the income and the employment. It's as simple as that, which is typically, right, the most challenging part on an investment property, especially when a customer has other investment properties. Reading those tax returns could be a challenge. And, I just bought the property a few months ago, but it wasn't in service, and how many months can I use it as income, and this and that and the other. We take all that guesswork kind of out of the picture, and we want a simple, clean 1003 with all the data kind of that Stacy mentioned. But again, we're going to remove the biggest challenging parts of the 1003 typically, especially for our investors. No income, no employment, and that's it. Very clean.
Yeah, I think it's really important that, what Carlos said, no employment, no income. You're listing your schedule of real estate. We don't need, lease agreements on those other properties. We're just going off what Stacy mentioned on how this subject property cash flows. So Bruce is asking a question here. Stacy's going to cover the credit. Bruce's question really was, okay, we don't have employment, we don't have income, but what about credit? So Stacy, touch on, credit score required and the trade lines required, and then I promise you guys, we will dive in. We've got a lot of questions coming in here, so we will get your questions answered.
Great question. So we do require the borrower to have at least a 680 mid score. Now, guys, remember, there's no DTI on this program. So a lot of times when I'm doing a pre-qual, I'm going to look, maybe there's 2 borrowers. I'm going to look to see who has the better score. If it's a significant difference in rate, why not take one of the borrowers off and just use the borrower with the higher score to give them a better rate? Because there's no DTI. So that case being, minimum score is going to be a 680. We don't want to see any collections, charge-offs, or judgments in the last 2 years, unless they're medical. I don't care about medical. Bankruptcies, foreclosures, and short sales, I don't want to see in the last 4 years, which I think is pretty reasonable. Trade lines, we do require, we do allow 1 times 30 on a mortgage in the last 12 months as well. We know life happens, people have issues, we get that. Even if they have some, maybe a small little charge off with AT&T and they were battling it or whatever the case may be, give us an explanation. You know, most of our loans have some sort of exception on them anyway. It's not like Run DU, it's black and white. These are all gray loans. Tell us the story. You know, and there's exceptions to be made if they did have maybe a small minor charge off. It's not the end of the world. As far as the trade lines go, we do want to see either 3 trades for 12 months or 2 trades for 24 months. Now they can be closed as long as they're closed within the last 12 months. So we want to see activity in the last 12 months, and then 2 for 24 or 3 for 12. And that's basically it on the credit.
Yeah, thank you, Stace. Carlos, Chris is asking, and Stacy mentioned it, why are we able to close in an LLC specifically for this program?
Well,
versus maybe not a primary or a second home, sorry.
Right, yeah. Right, typically on an investment property, we get a lot of those calls, right? My customer wants to go Fannie, and he wants to use, or he or she wants to close an LLC for their protection, for business partnerships, for tax purposes. So we do allow that. And one of the things that Stacy said that's very important, that we always want to make sure that all the borrowers on our transaction, typically 2 max, are also on the LLC. We want to make sure that is the same number. We run into some issues sometimes when we have multiple owners of an LLC, but only maybe one person wants to be on a loan. It could be quite challenging, daunting, kind of to see, well, you know, who's the real owner and how much of a percentage. So we kind of make it a little bit easier for that. We just say, you know, 2 people max, both need to be on title, both on the mortgage, both on the LLC, and that's it. Kind of keep it simple and not get into this, which has happened before. And I have friends in the business that allow for different situations on title, and it just becomes a nightmare later on with the loan process. So we want to keep it simple.
Perfect. Thanks, Carlos. Stacy, who's asking, and I'm hoping I'm not pronouncing his name incorrectly. Burnham wants to know, what are the reserve requirements on this?
Oh, great question. So it's 6 months reserves just on the subject property. So that's not very much. So it's just the subject property, and it's 6 months reserves, which is going to be PITI, and again, HOA if there's HOA.
Yeah, so that's key. So if you're a real seasoned investor and they have a ton of properties, again, we're not asking for lease agreements. We're not asking for reserves on those other properties. So Eddie, we are going to cover, our foreign national does fit under our debt service coverage ratio program. We're going to cover that after we get through a lot of our Q&A here for the debt service coverage ratio. For the record, this is going to be recorded, and we will get this out to anyone who registered for this webinar by end of day tomorrow. So a couple other questions here. How quickly, Carlos, can we close a debt service coverage ratio program?
I would say the average is not more than 18 to 21 days, to be honest. Unfortunately, but not really that funny. You know, our volume levels for all of us, unfortunately, a little bit lower, right? So we're not having the issues overall in the industry of, you know, 3.5 weeks for an appraisal. I can't find an appraiser. So this program, I mean, just like Stacy said, it's pretty much all determining on the appraisal, right? Once we know the coverage of that DSCR, we got a green light, we're ready to go. And we've done all the other work up front. We looked at credit and this and that, and we know title. So it's really a matter of just getting that appraisal to validate that number, and we're gone. And like I said, unfortunately, appraisers are turning these appraisals much quicker. I think I had one on Monday. It was turned in on Wednesday, and it was really fast. So again, honestly, 21 days, 3 calendar weeks, I guess, that's too much, I think, in my opinion, But if you need, obviously 30 days would be great, but 3 weeks is I think the average for all of us. I would say, Stacy.
Yeah, if it was a year ago, we knew appraisals were taking, really long time. So really, it's just a matter, and appraisals are getting turned a lot quicker here. So Stacy,
too, remember, I'm sorry, John.
No, go ahead.
These aren't TRID loans either, which is, so they're going to be funding the same day. We don't have to wait 3 days. So you also have that as far as we don't send out a pre-CD on these loans. So you don't have to wait the 3 days, which also answers that other question. How can you close it in? How come you can close it in LLC? These are not TRID loans. So that saves you some time as well, even on a refi. Funds same day.
Yeah, Stacy, you talked about purchase, refi, cash out. I know you're famous for doing, a lot of cash outs so borrowers could purchase other investment properties. Talk a little bit about delayed financing, Stacy.
Delayed financing is great, especially if you guys were doing these loans, 6-8 months ago, when there were backup offers up the wazoo behind you and you were afraid to lose the loan or lose the home. So if you guys purchase, or if your borrowers purchase a property cash, they didn't want to lose it, they needed to close faster, they purchased it cash, now they want to recoup their cash, or even if they used a private lender and they want to recoup that right away without having to wait the 6-month seasoning that typically most lenders require, we can do delayed financing, which means we're going to turn around and refi them, even though we're not going to hit them for cash out. It's called delayed financing. So we're going to give them the LTV and the rate as if it was a purchase. Just show me where they got the cash, that it was their own funds, it wasn't a gift or anything like that. So you're going to source the funds used to pay cash, and we're going to turn around and give them the LTV as if it was a purchase. So all the way up to 80% of their purchase price that they just closed on.
Great, thanks, Stace. Carlos, talk about the prepayment penalties on our investment property and only on investment properties.
Yeah, so I think that's another big, I think, win in our programs. I think we always get the, how many months and what are the rules and what about this? What about, we keep it very simple, in my opinion. It's typically 6 months of interest payment if you pay off the loan within the standard 36 months. So it's a 3-year prepay. If you pay before, obviously it's 6 months interest payment. When we do the math, a lot of times it's really not that bad. I honestly sit down with our broker and I say, well, let's do some math here. What's the prepayment penalty if they choose to buy it out? If they choose to, like I said, you can buy out the prepayment penalty from 3 years to 2 to 1 or 0. Buy it out completely. So that's an option, right? So if you do that, there's obviously extra costs and extra fees, either to the rate or to the points. But sometimes it's not even worth it. So it's a conversation that your AE will have, Stacy and myself and most of us. We sit down, we want to do what's best for your customer, who we all want to take care of. And I think working in their best interest, we come to a conclusion of maybe buying out the prepaid makes sense, maybe it doesn't. So case by case, I would say. But 3 years, 36 months is the prepaid.
Thank you, Carlos. Stacy, you talked about trade lines. Jody's asking, can we use an authorized user account as a valid trade line?
We do not. We do not use authorized user accounts. And in the same sense, not on this particular program because there is no DTI, but on like a bank statement program, we also do not hit their DTI for authorized user accounts as well. But no, that would not be a trade line. I'm sorry.
Yeah, thank you, Stace. Sorry, Jody, but they have to be valid trade lines. So, Carlos, talk about, it's become a more neutral market and seller concessions are starting to come more and more into play. Talk about what we allow for seller concessions on this investment property program.
Yeah, we go a full 3% on seller concessions. So in this market, right, sellers are a little more willing now to help out our borrower. So absolutely. That also includes, by the way, Sometimes we get asked, can the realtor contribute? Can somebody else contribute? Yes, all in 3%.
Thanks, Carlos. Stacy, a question here about, can we use gift funds on this program?
No, we don't allow gift funds on investment properties at all. We do require seasoning of 60 days for their funds. They can always, get the funds in their account, start the ball rolling, but they do have to be seasoned to 60 days without any gifts.
And Carlos, you probably had this problem a few months ago, minimum loan amount. What's the minimum loan amount on this program? So I just had to get that one in, sorry.
Yeah, I think Stacy and I are the kings of the small loan amount sometimes in this program. We get the, do you guys lend, on a mobile home for $51,000? That's the purchase price.
We don't do mobile homes.
We don't do mobile homes, right? So we don't do any manufactured housing. Minimum loan amount, it's kind of, it's $75,000. So it does give you a lot of flexibility, and you guys will be blown away how many times Stacy and myself, we've gotten big loans, and technically the loan officer has, right? Because a lot of loan officers, especially when the refi boom and all that, they were turning away these loans, right? And they didn't have time for them, and you just turned away a realtor who probably was helping somebody with their first-time purchase or first-time investor. It was a nephew, a niece, who knows, family member, and they got all these no's. So you took the loan, we closed it, $76,000, 75 and change, and that realtor remembers that you did that loan for them when everybody else turned them down. So guess who's going to get that big FHA loan or convention or $2 million bank statement loan? You guys are. It comes to us. So we do it also as a service to everybody else, because we're not above above helping anybody else. So yeah, 75,000 gives you a lot of flexibility in those smaller price markets.
Yep. Thank you, Carlos. Stacy, talk about how many properties. There's a question here. How many properties can one investor buy? And I know you talk about a lot of these deals come in multi-pack. So explain a little bit more on that.
Yeah. So kind of a step back, they can own unlimited amounts of properties on this program. How many can they buy and use Angel Oak? Our guidelines say 5, but again, that's a guide. It's not a rule. And in my house, rules are made to be broken. But that's just a guide. So a lot of times people do, I've done 8 packs, I've done 10 packs for people. And what we like to do is do them all at the same time, so you get the same underwriter. Everything's consistent. If they want to do, I did a 10 pack of refis. They were cashing out refining. It was a 10 pack for the same borrower. They were getting out of private mortgages and cashing out on each property to go buy more investment properties as DSCR purchases, or they were paying cash for the new purchases. So don't get too hung up on that answer. Just if it's a good borrower, we'll look to do multiple loans for them.
Yeah. Hey, just a reminder, this is being recorded. We'll talk about rates when we go over our quick quote tool. I know a lot of people have asked about that, but this is being recorded. If we don't get your question answered today, by tomorrow morning or even late today, your account executive will reach out to you. This recording will go out to everyone who registered before end of day tomorrow. So just want to make sure you're all aware of that. A couple other questions coming in here. Carlos, about a cash, can a property be vacant if the borrowers wanted to do a cash out on our investor cash flow program?
Yeah, unfortunately not. And I want to say, and I'll defer to all the Fannie experts, having done Fannie many years ago, I think that was the same rule for us back then. I don't know if they've changed that. Again, the Fannie experts, you guys would know more. But for us, we also want to avoid, in this rental hot market where people are really looking for rental properties, and it doesn't kind of make sense for you to have a vacant rental property unless you kind of just finish repairing it maybe. But for the most part, we're going to be a little cautious when a customer has, even on a written term, when there's a vacant property, we kind of want to ask a few more questions. But the guideline does say cash out is not allowed on a vacant property, unfortunately.
Yeah, so thanks, Carlos. Stacy, Cynthia's asking, is it one loan, one property, or can there be a blanket loan?
It's one loan per property. We don't do blanket loans. And I kind of wanted to touch base on that vacancy factor as well, because there's so many Airbnbs. And a lot of times realtors are marking vacant when it's in between an Airbnb renter. If you get a chance, talk to the AMC. The house isn't vacant. It's got furniture in it because you have your Airbnb. So technically it's not what we call vacant, because Carlos is right. We won't lend on a vacant property. You walk in, it's all bare. But when it's Airbnb, there's the furniture, the silverware, everything's stocked. It's just in between renters. Make sure, if you can, that the appraiser marks tenant occupied and not vacant on those, because then you have to go back and it's kind of an ordeal.
Yeah, Stacy, that's a great tip. Thank you. That's really key in doing that. We have Tina here. Tina, if you're in Florida, I'll introduce you to your account executive. She already has an interested party in wanting to do one of these loans. So that's awesome, Tina. Couple other quick questions. Carlos, what about a 1031 exchange?
Sure, completely allowed. We do that. Did one for a gentleman who sold a gas station, another one sold an ALF. So, not a problem. Just we will work with your title company, with your attorney, and our closers, of course, to make sure that's a seamless transition. But absolutely, all welcome. Not a problem.
Yeah, and Stacy, Bruce is asking, can business funds be used for down payment, reserves, closing costs? Great question.
Yep, they can be used for down payment, closing costs, and reserves. Business funds, 401ks can be used for reserves. Any IRAs, if it's just being used for reserves, we're not going to ask you to liquidate them if they're in a IRA or 401k. So you might want to use those for reserves, and then if they have that. But yeah, any of those are available to be used.
Yep. Again, we talked about there's no DTI. Stacy mentioned that when she was going through the highlights. We're just qualifying to borrow off the subject property and how it cash flows. So we could talk, Luke, we'll talk about, and Stacy does a really good job with this. Stacy, maybe you do this really well when it comes to bank statements and, about the rate. Talk about how you coach your brokers into, basically selling the rate, not just for bank statements, but for DSCR.
Yeah, so on the DSCR, again, we all know rates are high. I mean, you can price them out conventionally and they're, whatever they are right now in the 7s. Yes, we are a little bit higher than that because they don't have to prove anything. So it is going to be, a little bit higher of a rate. But guys, we probably, if you're my age, we bought a house where the interest rate was super high, because we love the house. What is your saying, John? Marry the house, date the rate. You fall in love with the house, get the house. The rates are going to come down. My first loan, I think, was 12.5% on a SIVA, stated income verified asset. But guess what? As soon as the rates came down, I refinanced it, got into a lower payment. And when it comes to the bank statement programs, I know this isn't a bank statement webinar, but I tell my brokers, I said, don't be afraid to sell the rate. Don't even sell the rate. Sell the payment. Don't sell the rate. It's what the payment is. Are they comfortable with this payment? Can they afford this payment? But on the bank statement program, you got alternative financing. You're not even using your tax returns. You can claim all of your income that you make and give Uncle Sam 33% of that, 35% of that if you want. But most people aren't going to do that. So bank statement borrowers, they don't seem to bulk on rate. Same with investor cash flow. You're not proving anything. You're not proving income. You're not proving a DTI. You're not anything. So sell them on the payment, not the rate.
Yeah, Carlos, I know you always do that too. You're shaking your head. It's just, these savvy investors or first-time investors, they want to get into home ownership and specifically the investor home ownership. And, they're really not concerned about the rate or even how it's cash flowing in the beginning, because we see where rates are rental prices are going. They're still going up, right? So, yeah, they just want to get in and they realize they're going to accumulate their wealth through the appreciation of the house. And when they pay off the house, still having what we call mailbox money, rent checks coming in, and the house is paid off. So that's what it's all about. I know we're about almost 20 minutes to the top of the hour. Carlos, let's talk. A couple of people have asked questions regarding our foreign national. Let's talk about our foreign national, cover some of the highlights. Maybe we'll jump back to some questions with DSCR, but give us some highlights of our foreign national program, Carlos.
Yeah, we do a lot of foreign national loans, Stacy and I, especially that we're in Florida, right? A lot of investors and I have a lot of brokers that say when something goes wrong in the world, they end up in Florida, right? So it's good. It's good business for us. Now, one thing I always like to start with on this program is we're not a traditional foreign national lender, right? So, your traditional foreign national lenders, which you know who they are going to go ahead and definitely give you lower rates. So again, going back to the same rate conversation, they're the A paper of the foreign national lenders. They're going to ask you for tax returns and this and that and international credit and trade lines and reference letters and all this stuff that we did. I started in 1999 and it hasn't changed. It's the same book of requirements. But there's a lot of customers that can't provide that, don't want to provide that, and are afraid to provide that. So if you've done any foreign national loans, if you work with this market, you understand that some of these people are coming from countries that showing your wealth can get you hurt, and unfortunately, they want to stay as quiet and they want to fly under the radar as much as possible. So that's what our program, which is based off of the DSCR that Stacy explained, as long as the rent basically covers a mortgage, plus we go ahead and there's a deal for you there. 30% down, minimum loan amount $75,000. You guys can read that. It's pretty much the same. But that's really the basic I think benefit of this program. Given the fact that it's a DSCR, it removes so much headache and guesswork, and unfortunately, I don't want to say fear, but yeah, it's just concern that the customers have that say, man, if I go to my bank over there and I ask for money and I ask for letters and they're going to get wind of what's going on, maybe I don't want the government to know what's going on. So yeah, this program allows you to be a lot more, personal, right? And handle your business and not let everybody else know what you're doing. And I think for the most part, most countries are allowed here. The main country that's not allowed that we typically see in Florida is going to be Venezuela. We are okay with Argentina. I get a lot of those calls. Brazil, Argentina, Colombia, Chile, Ecuador, Peru. All those countries are fine. Again, going down to the same loan amount of $75,000. If you have that small unit that you have a deal on, talk to us about it. We can definitely help you. 12 months reserves have to be in a U.S. account. After closing, that money can be used to buy another property. So I get that asked. Well, the other investors asking for that money to be frozen for 1 to 2 years, and not, customer can't touch. It's like they make it into kind of like a CD, certificate of deposit, and they penalize you if you take it or you withdraw that money out. So we don't do that. So that's your money. We want you to use it, but I just still need to be sure that you do have those reserves in the U.S. When go ahead and set up an auto payment, an ACH, an automatic clearinghouse for that payment every month. You can see that I guess the allowable visas are right there, right in front of your screen there, right on the website. What else am I missing, Johnny?
I think you've hit it all. Stacy, anything to add with regards to foreign nationals?
Yeah, we get a lot of Canadians, people from Europe. They participate in the visa waiver program, so they don't even need a visa, just a valid passport. So if you do have it, Carlos and I can send you a PDF of the sanctioned countries as well as the visa waiver countries. This is probably one of the easiest programs that we have. You don't have to build credit. We don't need international credit. You don't need credit reference letters or bank reference letters. None of that. No income, no employment, no credit report. It's literally your cash flow of the property, which again is going to be a 1-to-1 ratio on this program, and your assets being seasoned for 60 days and 30 in the US. Those are the two biggest, I think, the two biggest points on the foreign national program.
Johnny,
Yeah,
one more thing before we go on that one that I forgot to mention. This is a 30-year fixed program. So we've got, if you've been in the business for a while now and you remember the past, I remember we had a lot of customers that purchased with an ARM, then the rates just shot up, or the program got discontinued, or the guidelines changed. So all of a sudden they went from a rate down here to all the way up here, and it was variable every month. And they were like, oh my God, I'm half the world away. I don't know how much the payment is. I'm paying late. I'm paying incorrectly. Is a 30-year fixed option available so that I can at least, take the worry out of it? And if, like, we were saying, right, same thing with, date the rate, marry the house. If the rates improve, go ahead and refinance.
Yeah.
You don't have to have that constant pressure that, oh my God, what about if I don't qualify in 2 more years when I need to refinance because it's going to balloon or something like that? That's what a lot of our customers like this loan. It's like you put it on auto payment and you kind of forget it, and you can control your cash flow, right? You know how much you put in, how much you're paying out. So it takes that guesswork out of it as well. We want to make it very easy for you to acquire multiple properties, and this program is one of those.
Yeah, we're seeing a little bit of an uptick on this because of all the geopolitical stuff that's going on in the world. A lot of people, this is a safe haven to park, as Carlos mentioned, your money, right? So, and we also see a lot of this around large universities. You have people all over the world wanting to send their children to, American universities. So instead of them just renting a dorm room or renting a house, they're purchasing that investment property for their child while they're attending university here. So it's a great program. And again, about a year and a half ago, we put it under our debt service coverage ratio program. As Stacy mentioned, you don't have to build credit. We're just qualifying that borrower on how that subject property cash flows. So great program. Carlos, you're going to take us through a lot of people have asked about rate. I'm going to go back to the home page, Carlos, and let you drive me through a debt service, how to get to our quick quote tool, but also how to submit a pre-qual to us. So go ahead, Carlos.
Yeah, so everything starts, our launching pad is angeloakms.com. I always try to use Google Chrome, right, because it's a little more compatible with our system. Sometimes you get some errors there. So angeloakms.com, you're right on the home page. If you're looking for a mortgagee clause, documents, contact, it's right there. It's all right there in front of you. Programs, everything that we went over and we're going over right now, it's all there right in front of you. So you may want to save that page. So we want to go ahead and right where John is, right in the middle of the page, there's a button that says non-QM quick quote. Now, I will say this, before you quote the rate to your customers, I always ask that you talk to us about it first, because yes, you may find the rate or you may not find the rate or a program. And it's just a matter of a little switch on a drop down that you should have selected one and not the other. So don't disqualify your customer just because you can't find it. Hey, Stacy, I'm on your quick quote. It's not giving me a rate or a program. Can you help? Okay, we ask you that you do that because it may happen, okay? We go to non-QM quick quote, select the broker type. The channel type is broker. So Johnny, you want to give us a loan amount there? 500. There you go. I like that one. 740 score. What's our LTV, Johnny?
75.
75. So housing history, it's a pretty nifty tool, because if you've had late payments on your mortgage, go ahead and select the late payments, maybe not. You see, it gives you options there. So 1 unit, you can hit the 1 unit drop down. Is it a duplex, triplex, fourplex? Is it a condo? We can select it from there, okay? And what are we pricing now, John, DSCR?
Yes, sir.
Okay, on the drop down is a purchase, on the income type, all the way the last one, DSCR or investor cash flow. Occupancy is always going to be investment. Remember, always investment. 30-day lock is going to give you best pricing. Prepayment penalty is standard of 3 years. No escrow waivers, which is allowed. But again, this is just to give you an idea of how to get to the rate. You're looking at a 75 LTV at 8.99. And that gives you the seasoning and the housing BK requirements. If you had any issues with foreclosure, short sale, deed in lieu, maybe a forbearance. Now, I like this other tool that we have here, I guess, connected to this. Go to the view rates button. What about if your customer says, hey, you know what, the 899 is okay given the market, but you know what, I want to try to hit an 8.5 because maybe for cash flow reasons, we need a slightly lower rate. There it is. So 8.5 is going to cost you $5,000. Okay, so once you're ready to submit your 1003 in credit for pre-approval. We want to look at every deal, okay? Every deal has to be touched by Stacy, myself, at least with a 1003 in credit. And if it's a DSCR, remember, no income, no employment, right? So that 1003, that credit, Johnny's going to select that option there.
Yeah, Carlos, before I select that option, you hit on something that, there was a question in here that we didn't get to, but, Carlos and Stacy and all of our other account executives, they are basically pre-underwriting this file, right? And the DSCR is a really quick file to pre-underwrite because you're just looking at 1003 in credit report. You're probably going to go out to Zillow and look at maybe what the rents are coming in at, and you'll talk to your account executive about that. But I want you to understand that they are pre-underwriting that file, and if they have any questions, I think Stacy mentioned this up front a little bit. If they have any questions, we go to a help desk, and if they're unsure about anything, whether it's a trade line or maybe it's a collection that Stacy mentioned, and it was just a small AT&T, we're going to get that approved prior to sending your borrower out shopping for that investment property. And Carlos, I'll ask this question to you because it was also asked: do we do pre-quals on TBDs, which are to be determined properties?
Sure, all the time. The new construction homes, we encourage it. We want a pre-quality customer just the same way you want a pre-qual that FHA conventional first-time borrower. You want to sit down with them. How's your credit? Do I need to add trade lands? Do I need to, all these other things? Do I need to build up this person? Don't think that a self-employed borrower that makes a lot of money or owns properties, don't think that they don't need help as well, because they may think one thing or they may be doing one thing that's detrimental to helping him or her qualify for a mortgage. So give us a ring as soon as you know. Don't send us docs. Again, everybody may have a different take on it, but let's talk about your scenario first, because that way I think that's how we're best effective. Because if we want to say, I can't do the deal for this reason, you want to know up front, okay? We don't want to take too much time, too much of your time, trying to work on a scenario that just doesn't work, pulling credit, doing all this stuff, putting them on the contract, and then the deal doesn't work. So definitely get us involved early. So we did the first step. Here you can upload, you can choose to upload a 3.4 MISMO. It's not really required or necessary. Some people, you can do it. If not, just hit next. And now this is the important part. We want to know your account executive. If you don't have one, you can select, of course, I don't have one. We'll find one for you. Put your company name, LO, all your information there. And as you can see, 2 pieces of information. 1003, you hit that bucket right there, drop your 1003 in there, credit report, drop it right underneath there, those 2 red asterisks, and you're done. All right, you want to work your way to the bottom. If you want to have any comments that you want to write us, I don't really require those. Just hit submit. We get a notification, and we'll work on that pre-approval, call you, and review it. And that should be turn times are, I believe, John, 24 hours on turn times.
Yeah. Unless you or Stacy or one of the other account executives has found something or have questions, but really, this is probably the easiest pre-qual to do. It's just really credit, 1003. What does the property look like? Does it look and smell and feel like an investment property versus a primary? So it's a pretty easy pre-qual to do. So yeah, I'd say less than 48 hours.
Yeah, we should be able to do these pre-quals. And talking obviously to myself about myself and Stacy, we're kind of seasoned, and we can do these in 5 minutes, but 2 minutes. But that also means that we've reviewed your scenario, we've reviewed credit, we reviewed the entire deal from point to point. We want to pre-underwrite the file. Some of my brokers say, man, you guys are worse than the underwriters. We are, because we know what Angel Oak's appetite is. You may work with other investors that have a certain way of working it, and are okay with some things and are not with others. So we want to make sure it fits our box. If it fits our box, the actual writing up of the pre-qual, what we're doing now, like stamping it, it's going to take us 2 minutes. But yeah, the toughest part is understanding the deal.
And right here alone, we have about almost 16 years of experience just at Angel Oak, let alone the entire industry. So yeah, you're working with the best, and they know what your reputation means. And if they're going out shopping with one of your referral sources, you want to hope Carlos and Stacy have done that pre-underwrite to the best of their ability. And if they have any questions, again, they have a ton of resources available to them to make sure that that pre-qual that they provide you is worth its weight. So
Calling card.
calling card. So Stace, you started talking about marketing earlier, right? This is your favorite part of it. So one thing I do want to back up. So what the quick quote that Carlos just went through, you don't need login credentials to use that quick quote, but you are going to be required to have login credentials in order to get to our great marketing portal. So Stace, I'll log in and I'll let you do the driving for me here. So.
Okay. So guys, once you get logged in, if you don't have credentials at the moment, feel free to reach out to your account rep. You can also go into, I'm not going to make Johnny go backwards, but you could go into where it said resources at the top when you first log into our website. It'll say broker package, and it'll have what's called the user request form. That's what will get you login credentials with Angel Oak. But again, if you know who your AE is, or just reach out to info@angeloakms.com, we can get you set up with your AE, your local account rep, and they can get your login credentials set up for you, send you the form that you need. So once you do log in, across the top, you'll see where it says marketing portal. And then on the marketing portal, I'll have John go to the flyers, but real quick, the presentations that were above there, those are realtor presentations that we already did for you. And you just drop in your logo and your contact information. As AEs, we're more than happy to go out there with you and do a realtor presentation. But these are great little presentations for you guys to customize in your own, with your own information. So,
yes, so Stace, yeah, I'll talk a little bit more about that. Because I think Stacy says it, Carlos says it, all the AEs who go out and do them on behalf of your loan officers. I believe they're the most powerful presentation that you can do, that Angel Oak will do on your behalf. We don't say anything about Angel Oak. We just say, I'll use Cynthia, who's been asking some questions here. Cynthia, we're just one of Cynthia's investors, and she has access to these programs, and she wanted to inform you of these programs that are out there because, hey, look, 84% of you originators on this call today, haven't originated a DSCR loan in the last 12 months. So can you imagine what your referral source, their knowledge of this program is probably a little bit smaller than that. So I would be safe to say it's almost 95% have it. And let Stacy, let Carlos, let your account executive be your subject matter expert. Again, they don't say anything about Angel Oak. They just say, refer everything back to Cynthia. So sorry, Stacy, that's my little PSA.
Yeah, I like it. So back in the marketing portal, John clicked on where it said flyers. We have about 20 flyers that you can customize in your information. So if you look on the left-hand side of the screen, you can put in your logo. So you can put a logo on the left, you can put a logo on the right, you can also put your photo on there. I even had somebody put on their logo on the left, they put their famous or their favorite football team on there just for fun. So you can customize it. Yeah, it was cute. So you can customize it any way you want. And then you put your phone number, your name, your email address, your address if you want. If your company requires you to have a certain disclosure or disclaimer, you can put that on there as well. And then you're going to hit to save changes. Once you save those changes, and again, you can go back and correct anything if you misspelled or whatnot. Once you save those, it populates on every single flyer that we have. So you only have to do that one time. So if you see where John's pointing, there's going to be a drop down arrow, and then you can select another flyer right there. And all that information that you just put on the left is already going to be populated on any flyer that you select. So we've done all the work for you. You just have to put your information in there. Now you can download it, print it, take them with you to open houses, to realtor presentations, to builder. If you're going to go see a new builder, wherever you might be taking these, we've done the work for you. Utilize them. It's great. It's free. Doesn't cost you a thing. You can even have your AE. I've done these for my brokers. As long as I can go on your website and get your logo, I'll print them out or do them and download them and email them to you. It's so simple.
Mhm.
Utilize it, guys. It's there for you. And again, it's free marketing.
Yeah, I think the big word there, Stacy, is free. It doesn't cost them anything, and it's all the content has been made for them. So it's really it's why wouldn't you at least try it, right? It's just
Yeah.
why wouldn't you? So
Why not?
right. You want to talk a little bit about social media, Stace?
Sure. So we do have some flyers that you can put on social media. They're just quick little, it doesn't go into any details about them, but you can actually click on it and use it to do on your LinkedIn, your Instagram, your Facebook, whatever social media platform you may use. And they're just kind of reminders that you have these programs to offer clients. So it's nice, maybe I do have a broker that actually puts one about once a week. They'll put a different one out there. And again, it's just kind of, out of sight, out of mind mentality. Stay in front of them, stay in front of their face. And the biggest way nowadays to stay in front of people's face is social media. So these are great. Again, the work's done for you, and use them.
Agreed, Stace. It's all been done for you, whether you want to market yourself towards realtors or you want to market yourself towards borrowers. We already have the content here. So it's just a matter of really copy and pasting. We also have whiteboard videos that you can post out, again, on any platform that you're marketing yourself. And then, most importantly, I do believe that realtor presentation is the most powerful one out there. Carlos, anything to add about marketing? I know you do a lot of it. Anything else to add?
Yeah, the flyers also, since we're talking about foreign national, they're in Spanish also. So that's helpful. I've gotten a lot of calls from realtors through loan officers and then back to the realtor that they saw the marketing in Spanish and they send it directly to their borrower, and it's a lot easier to understand. They're like, well, help me explain the program. Well, there it is, right? It's all done for you. You don't have to worry about any changes or guideline changes. It's all there. And the other thing I would say that I'm shocked how many people don't use us for presentations. Yeah. Everybody out there has a friend that's a realtor, that's a loan officer, and we're constantly fighting to retain those good realtors. And realtors, what do they say? You're as good as your last deal, right? And I'm just shocked sometimes that people don't use us, Stacy, myself, and the other AEs to do these presentations for you, because that way nobody's going to speak to these programs better than us. And we promise you that you're going to get conventional FHA, agency deals from there, because you're talking about something else other than the standard Fannie Freddie stuff that they're just bored and they hear all day. So they're like, whoa, you know what? Stacy brought this, or my loan officer brought Stacy about this other program, and it just starts a conversation. Let's go have coffee. Let's go do this. And guess what? Now you're getting all their business. So use us for that. It's free, guys. We don't talk about Angel Oak. We don't give out business cards. We show up, and we do the whole show for you. So,
Carlos, one of the statistics I use is, and it's more around our bank statement program. And a lot of you, I see some familiar names here through the question box that, were on our bank statement program. Is 9% of the loans we close in our bank statement program are actually realtors. And I always tell people, if you get 12 realtors in a room, you're probably going to get one of their loans. And 2 weeks ago, here in the Dallas Metroplex, we went out and did a realtor presentation on a loan officer's behalf. And there were only 7 or 8 realtors in there. And guess what? By Thursday, we had one of those realtor loans for our debt service coverage ratio program. So, guys, it's a way to get your business going too. And when your referral source wants to use you as their loan officer to bring a program that they've never even heard of before, how valuable, as Carlos says, you're probably going to get the rest of their conventional business too. So,
sure.
Stace, anything in closing you want to just add here, because we're close to the top of the hour?
Yeah, just thanks for joining us, guys. And, don't ever turn a loan down without contacting your Angel Oak account rep first. If you think it's something you can't do or maybe you don't think you can get financing for this borrower, don't shut them down until you at least called us. Maybe we can think of a way to get the loan closed. Maybe it's not the way that they presented it to you, but maybe we know of a way we can structure it to get it done. So just give us a holler on any loan scenarios that are falling out or can't go conventional. Give us a try.
Carlos?
Yeah, same. Give us a try on those scenarios. And again, like what we just said, a minute ago, bring us on those presentations. I know you may not feel comfortable speaking about these programs yet. Maybe not. We'll do 10 of them if you want. We promise you the business is there, and we promise you that when you do these presentations, you're going to get a lot of realtors are going to show up, because like I said, if you invite them over for cookies and juice and an FHA presentation, believe me, they're going to find 1,000 other things that they'd rather be doing, and they'll say, hey, sorry, can't make it. But when you talk to them about getting more listings and getting more borrowers using a no income program, believe me, they'll show up.
Yeah.
And that's when you got their attention. You capture their attention, and you build a relationship, and eventually they're not doing business with anybody else, and they're only doing business with you. So don't forget.
Yeah, thank you, Carlos. David, I know you said your meeting went on longer. This is going to be recorded, David. So, and this has been recorded. So we will get this out to you before end of day today. But Stacy, Carlos, thank you very much for your time. I know you guys are busy, so I really do appreciate you taking the time and being the subject matter experts that you are. And on behalf of everyone at Angel Oak, we're wishing you and your families happy holidays. Be safe. But hopefully in 2023, we can help you guys close some more loans. So thank you, everyone. Have a wonderful holiday.
Thank you. Happy holidays.
Thank you.